We're going to shift gears here. We've been talking a lot of big tech, a lot of these big stories. We're going to talk a little Dave & Buster's. And I was thinking about it during the break. I'm not sure I've ever been to a Dave & Buster's. And, granted, unless I, have children at some point here in the future and they want to go there, I don't anticipate going to one. How about yourself? Any experience at Dave & Buster's, Caroline?
I'm shocked by that because I have not only been to Dave & Buster's, I've been there a ton of times. I have a much younger brother, so he sort of grew up with a sister who had a license that could drive him there. But no, I'm shocked. I mean, I don't play anything there other than skee ball, but I have been, and I can vouch for their chips and cheese. I remember we used to go watch the Sabres games there, and they had good chips and cheese. But, Dave & Buster's was a company we talked about last week because it missed on earnings and revenue, but gave a much more optimistic forecast for how things are turning out or looking this year. So let's bring in Ken Rose. He's a contributor here on the TD Ameritrade Network. Ken, tell us about what you're looking at here with Dave & Buster's. Ticker symbol play, but it's down 3.4% today.
Right. Well, one of the things that kind of jumps out to you when you look at the chart for Dave & Buster's was the huge move that it took after that earnings announcement. And again, that was based with regards to forward expectations, but it has been fading since then. And one of the interesting aspects is with their most recently completed earnings announcement, they basically came out with their 2021 annual report, and they actually only fell about 3.5% short of pre-COVID levels. So that actually isn't too bad considering some of the devastation that COVID has created up to this particular point in time. But another interesting aspect recently Play has come out and given us some information with regards to their performance during the first 8 weeks of 2022. And what's interesting about that is comparative store sales have actually increased 5.4%, and also walk-in sales have also increased by about 9.1%. If you take a look at that and you mix that with the fact that special events comparative store sales are still down by over 40%. As the COVID thing, as we continue to get over COVID and those special event sales are able to pick up, then Dave & Buster's could be in a situation where they could be creating revenues and earnings per share that could be the highest in their history following the following coming out of the whole COVID situation. So it'll be interesting to see how they continue to perform and how they continue to improve as we come out of the COVID environment here, Alex.
Ken, first off, thanks for joining us. It's always a pleasure. I got to say one thing quick, then I got a question for you. Dave & Buster's up there with Petco is just all-time great stock tickers describing the business play. It's just great alongside Woof for Petco. But talk to me a little bit about this company and kind of the concept of it's all the way back. So we had this time, and I have a 5-year chart pulled up here, Ken, for Dave & Buster's, and certainly it was struggling a little bit for the years leading up to the pandemic. Then you see it just go off the cliff like so many things in the peak of the uncertainty, and it slowly but surely built itself back up. But we can't make up for all that lost time. I imagine there were things that had to be done to, keep the company intact during that period, and we just don't get that time back. So I compare this to something like a cruise line that is nowhere near where it was pre-pandemic. How is it that we're all the way back here in this stock, and you're talking about numbers that are still down from those pre-pandemic levels, Ken? Yet we can't make up for that lost time, I guess, is my question.
Right. Well, I think one of the key characteristics when we're looking at the chart is not only the price of stock, but also the price of stock in relationship to the earnings per share. And currently, Play is trading at a price multiple of about 21, which is still a little bit lower than the average price multiple on the S&P 500, which is currently sitting at about a 25. So from that standpoint, the price appears to be fair in relationship to the anticipation that the pent-up demand is going to benefit this stock in a potentially big way, particularly when you're looking at a potential increase in revenues related to special events. This is also a company that has dedicated themselves to innovation, growth, and value. And one of the aspects with regards to value is they recently they recently partnered with UFC what I think it's called is UFC and MMA in order to broadcast all of those fighting events in all of their venues. So you have all those events in all of all of their venues as well. So how does that pan out though with regards to their clients? So I haven't been to a Dave & Buster's. I don't know that I really like MMA that much, but hey, if you got that along with everything else, then perhaps that could be a good draw for them.
Hey, Ken, you mentioned that COVID is one headwind that could be kind of on the back end, at least that's the hope, right? But another headwind that so many companies have had to face is inflation. How exposed to operating cost inflation is a company like Dave & Buster's?
Karen, I think you bring up a great point there, particularly if we look at their most recent quarter. Their most recent quarter, their operating margin actually dropped by about 50%. Their operating margin dropped down to about 7.48%. If you look at the previous quarter, their operating margin was sitting at about 13.9%. So that would be a little bit of currently an area of concern. However, if you look at their last quarter, they did generate they were very successful with regards to generating cash. I believe in the last quarter they generated over $80 million of cash. They took a fair amount of that to pay down their credit, and with that pay down, they currently have about $25 million of cash. Plus, they also have an additional $492 million of credit that's available to them. So from a financial standpoint, it looks like they're sitting in a fairly stable place at this particular point in time.
Ken, I would add to that too. I mean, if there is continued inflation, we see a plowback in consumer spending. Doesn't matter how badly we want to get back out there. Maybe we're just not going to be able to, as we have to, set aside more cash for our expenses. So maybe getting hit in both ways there. But I think the moral of the story here is MMA, exciting partnership. I'm a kind of casual fan of that. I'm not sure it gets me to Dave & Buster's unless there's a special event. So you get me there for a special event, maybe that'll be it. So it sounds like we got to get some of those back on the uptick side for a company like Dave & Buster's. But Ken Rose, looking forward to more from you throughout the week. Always a pleasure, and have a great rest of your day.